Welcome to Java. Thank you kindly for joining me. It is December 15th, 2024. It is also Sunday. So we're going to take a look at the week ahead as far as some of the things that we can expect. But before I do that, I would actually like to take a little bit of reflection over what just happened this past week because we had some major moves. So a mixed week ended on the downside, and this is mostly because of the market breadth. So we also had hot inflation data that kind of weighed on the market and also brought the sentiment down. What happened at the end of the week is that the S&P 500 did break their 3-week win streak, but more importantly, getting back to that benchmark gauge, and that is the market breadth. What that means is that more stocks fell than gained. And this happened for 10 consecutive trading days. Why is this significant? The last time something like this happened was in the aftermath of 9/11. So even longer than the great financial crisis that they had in 2008 has this occurred. So we've also got the Federal Reserve coming up with a quarter-point rate cut. So let's look at what we can expect this week coming forward after the weakness ending last week. So market risk indicator has increased significantly. We're at 292.2. For the MMRI, we are at the fear greed meter. Slight bit of a surprise because it's holding in the neutral territory and hasn't slowed. This means that there is enough people that have stayed in these markets despite what's going on. So with this, we've got the relative strength of the dollar is really the concern. I'm leaving this highlighted. Did stay the same just below 107. And what this is doing effectively is crushing some of the other currencies, namely the Western ones are feeling most of the hit. And we'll talk about that more in a bit, about the imbalances. So we've got the 10-year yield will keep under watch as well. It's risen a bit, 4.396. This is the larger contributor to the increase in the risk factor, as well as that market gauge. Now, we've got the Federal Reserve set to set their decision, most likely going to be 25 bit rate cut for this week. We're expecting that on Wednesday. However, we've got central banks booming the next few days because we're not only hearing from the Federal Reserve and their monetary policy rate decision, but we're also hearing from Bank of Japan and the Bank of England on Thursday. Now, this goes back to that currency crush and watching the relative strength of the dollar as it does affect both of these. Now, the larger thing that we're expecting from earnings coming out this week is that Wednesday, Micron will be reporting Micron Technologies, their microchip sector. They've been having a boom lately, and Lennar as well with home builders. And then on Thursday, we'll hear from Nike because they're a larger shoe company. And FedEx are the ones that I'm interested in because FedEx will give us an idea on the shipping. So sentiment right now is down. Cautious after last week's chop because it was quite the week. And it's getting weaker into the holiday. We can expect a volume decrease expected after Wednesday when we hear about the rate hike and going into the holidays. Now, increased volume means decreased volume means increased volatility. So that means that prices can rise or drop very significantly with that lower volume. Okay, so with this, let's move over to a couple of other things. We have the London Stock Exchange suffering the largest exodus since their financial crisis. And what this means is that they've got fewer listings in 15 years because most stocks are now trying to list in the United States on the New York Stock Exchange. Larger market pool, larger liquidity, and a lot more money flowing into that market. So with this, we've got United States deficit widening in November on higher health and defense spending. No shock there. We've been piling money into weapons to go overseas for multiple wars that the United States is supporting for whatever reason they want to try and justify. Now, we've got a recurrence of something that, in my opinion, needs to be watched very rapidly here. We're seeing another property meltdown in office, commercial sector. Now, the commercial-backed mortgage loans, CRE loans, modifications are starting to soar, particularly smaller banks. Now, smaller banks cannot absorb this buffer of the amounts of the commercial real estate that is going underwater. They have to refinance because the rates are still unsustainable. So in turn, with these securities going bad, the regional banks are now vulnerable. So they have to take lower down payments. They're taking hits on the loans. So the banking sector for the smaller sector, not the larger banks, are beginning to take a hit. So this is continuing with the mergers that will go into fewer and fewer larger banks, if you will. Okay, now with this, checking on our Western friends, we've got the UK again. Their economy shrank again in October, raising recession fears. Well, paired with their jobless claims, their economy, their unemployment rates are showing that they are already in a recession. It's just that the so-called experts don't claim recessions until it's in retrospect, meaning that it's already over by the time they admit that they're in recession. So, my opinion, UK and the United States are both in a recession at the moment. The UK much worse off. Germany also. Now, we've been speaking about Germany for a while. Germany facing further economic stagnation at their central bank coming out admitting this. Their GDP is forecast to decline further. Now, we know that Volkswagen, which is one of their larger industries, the automobile, is shutting factories and cutting back. We've got the economic minister there saying that they are cornered, questioning whether the country's business model can continue to work. And this is largely because they went to a green policy. This cut them off at the knees for inexpensive energy, which is largely what their production was dependent on. So still, they've got this energy issue, which is going to grow. And I'll talk about that in a moment now. With all of the troubles, France also having serious troubles. Moody's now just cut their credit rating down a couple of notches. And this is because of the political turmoil as well as their debt. So now, because of all of this, they're going to face much more difficult time paying back their debt because now their credit rating is down. In the meantime, Italy also having troubles. They're racing to finalize their budget to kind of keep the market's faith in their debt. Now, the Italian debt is one of the largest in Europe, so she's got quite the battle ahead of her. However, she has shown that they have improved the situation, even though it's still awful at the moment. They're at least making marks in the correct direction, unlike Germany and France that are really taking a hit. So with this, I want to take a look at a couple of other things. This one affects energy pricing directly, indirectly, but more important for Europe, specifically Germany. Had a couple of Russian oil tankers sinking in the Black Sea, and these were two ships, 29 crew members. What happened was they hit some rough seas, and as you can see, this tanker right here, it snapped in half. It's sinking. They are really trying to save the crew members, but this is a large amount of oil that just got dumped into the sea and going to raise not just the prices because the oil supply for this, but also the insurance prices they must pay in order for deliveries. So third party, they sell this to another country who in turn sells it to Germany. So Germany is now paying even higher prices that they're buying on the dark grey market for their energy. So with this, we've got a couple of other things that I would like to bring up, not directly related to the markets, but definitely affecting your life. United States officials been in direct contact with Syrian rebel group that ousted Assad. Now, they're not mentioning the group by name, but this is Al-Qaeda that has taken over. And here's what to know about the US push for stability in post-Assad Syria. Well, I'll sum it up for you. Here's what to know is that the United States, some agencies were directly behind this. The other side of this largely backed by Turkey. So The larger thing to think about is that this person in particular, much less his cabinet that he travels with, would never put themselves in direct harm's way. So you've got to ask yourself, he's been in several areas over there with this just happening. He obviously thinks he is in no danger whatsoever. So this kind of lends itself to a little bit of evidence, in fact, a massively overwhelming evidence of some other issues here, and that it is definitely directed. So also wanted to bring up this very sad issue here. This is a whistleblower for OpenAI. Now, again, this is through affiliation with ChatGPT, Microsoft. OpenAI is a separate company. Sam Altman on the board. Now, this whistleblower was found unalive. They're saying he did it himself. Highly doubt that, but there's a lot of things on this now. He had large information, was about to come out with this, only 26 years old, and may he rest in peace. Moving forward, we've got a lot of things that are coming out with this, but for now, I hope you are enjoying your weekend. Looking forward to a very interesting trading week. Should trade through Wednesday. After that, volume will die out significantly, but I'll be with you every morning. So until I see you again, my friends, stay free.